What's going on YouTube? My name's Tyler. If you're new to the channel, I welcome you. Hit the like button and the subscribe for the YouTube algorithm so we can push this video out to more people and help their portfolios as well. It is free 99 to go ahead and do that. So with that being said, and that's out the way, let's get into the point of this video, and that is my top 5 favorite stocks for 2021 to double, triple, quadruple, or even 5x your money. So that's a big statement. With that, let's get into it. So the first stock we're going to look at, by far my biggest position, and it should be no surprise, that is NIO. I think this is a good 3 to 5 banger. Could be more than that. Honestly, we could see a 10x banger if NIO does some crazy stuff, has some crazy announcements, crazy good numbers, all that. That's more unlikely. I think a 10 banger, but I think a 5 is definitely possible. I think a 3 is pretty much guaranteed if they play their cards right and the EV hype continues. But with that being said, let's get into what the analysts think. The 17 analysts offering 12-month price targets for NIO Inc. have a median target of $388.46. So that means the average analyst think this stock's going to go up 5x in the next 12 months. The average analyst. It says, with a high estimate of $648.82 and a low estimate of $98.10. So the low estimate is $98. That's still almost 2x. That's up about 35% from where it's at right now. So if that don't tell you what's going on with the company, how much growth they have going forward, then I don't think much else will. And then you also have this guy that's writing articles like this, titling them like this. So as you guys know and you see right here, powerful articles and titles like this help to pump the stock up. And as investors, as long-term investors, we want the stock to come down, at least in the short term, so we can buy more. If you guys are traders and you guys are trading this, then you probably wouldn't want it to come down unless you're shorting it or have puts or something like that. But this chart does look very bullish. Very, very bullish. It peaked out January 11th, almost $63, and then met some fierce support down here around $56, and then it's bouncing back up, and it's almost at its $62 resistance level. So if any good news comes out, anything happens, it looks like it's primed for a pop. If we take it out and expand, yeah, we're seeing good healthy green to red volume right here. Even though there is more red volume, yeah, just insane volume on NIO, guys. And a lot of NIO shares are traded every day. Like, I think NIO's average shares volume is 143 million. That's insane. That is institutional investors. That's not your typical retail investors that only account for about 3% of the total stock market. This is institutional buying. This is people loading the boat at these prices. So that's why I feel confident, especially buying NIO at these prices. And I got in at 45 bucks. So I really feel good about that entry price. But big institutions are buying this, so it's not just us. This is a solid company. It's supposed to deliver 130,000 vehicles next year, so if they can pull that number and maybe exceed it to 150,000 or more, then we're really looking at some serious numbers. And I think with the Chinese government behind this company, it could be a real winner. So, but we got to get into the next one. I don't want this video to be 2 hours long. The next company we're going to be talking about is Palantir Technologies. If you don't know what Palantir does, it's okay. A lot of people don't. They're actually a very secretive company. They do a lot of work with secret organization, stuff that the normal people aren't supposed to know everything. A lot of these companies are private too, so they legally don't have to disclose anything. I guess with the IRS and other government agencies they do. So you know this company, it is legit. They do make a lot of money. Getting into the revenue part and how much they have made. It says Palantir says in an updated filing it expects 42% revenue growth this year to 1.06 billion. That's great, 42%. That's insane. In its latest filing ahead of going public, Palantir said on Tuesday that revenue will top 1 billion this year. The company said it will generate adjusted operating income of $121 million for a margin of 11.5%. I bought Palantir on IPO day. I got in at $10.95. I bought 10 shares, and I actually remember exactly when I bought the company because I thought it was super unique and cool that I could own a part of the company. And I ended up selling 4 shares to make it free, so now I have 6 shares that are free. I am up 197%, so definitely one I should have bought more in. It was just a weird company at that time. Now you can see that they're actually starting to make quite a bit of money and get a lot of different contracts. Third company on this list, and there's quite a bit of reasons why I like this company, is Disney, which their most reckonable ones I think is brand loyalty. There's nobody that can compete with Disney. Name one company that can compete with Disney on the same level. There's none. You know, Sony has Spider-Man. There's certain small little movie segments and stuff like that scattered throughout that are popular, but there's not the same brand loyalty and brand recognition of Disney. And now I was just going over some of the revenue, and from December 31st, 2005 to October 1st, 2020, revenue consistently going up from 2005 all the way. A small dip here through 2009 when we had that recession, and then a slow uptick, and then it kind of flattened out, and then this is where it started to get explosive in 2019 with the introduction of Disney Plus and all that. There's a lot of inflow of money going to Disney, and I think that trajectory is here to stay. I'm not gonna talk too much more about Disney, but I will tell you guys I spent my position is worth $865. I am up 41.74%, or $254. It represents 3.5% of my portfolio, and I got in at $122. This is one that I really want to get more of, but I really want it to come down. As you can see, it's kind of waiting around for earnings. Next company we're talking about is Snapchat. Snapchat has been around a long time. It went public March 2nd, 2017, and this stock just really never got any love. Like, this stock was always on a downtrend basically since it went IPO. It fully bottomed out December 21st, 2018 at a penny stock level, $4.99. That's just crazy to me, because I've always had Snapchat, always used Snapchat, but clearly they didn't catch advertisers' attentions. So now they have been. Snapchat just went positive for the first time as far as cash flows and profitability, and that's an insanely big threshold to beat if you're a social media company. As you guys probably remember, one of the last social media companies to do that is Facebook. So at a $76.59 billion market cap, if they can remain profitable and not start losing money in the quarters going ahead, if basically this is a continued thing, Snapchat could see a huge bump in market cap, aka stock price. Now, if you're investing in Snapchat, just watch for the profitability levels and how long they can remain profitable. If they can remain profitable, we should see $100 by the end of next year, by September of next year. That's my prediction. But if they can't, then we're gonna get slaughtered. My average cost is $22.28. I have 20 shares at a 4.34% in my portfolio. I am up $626 and 140.61%. So this is definitely one that I wish I had bought more of. This video would not be complete if I did not mention this company, and that is going to be Cciv. So this company, if you guys don't know, is rumored to merge with Lucid Motors, and that is supposed to be the Tesla killer, the Tesla challenger. And I could see it, honestly. If these cars come out looking as badass as they look in this video, then Tesla, you're in trouble. And especially at this price price point, 69,900. That's not too bad. I mean, people spend $100,000 on trucks. I mean, so, and this has a lot of horsepower too. It is a insanely strong, powerful car. 1,080 horsepower. Like, that is insane. That's so insane. Most muscle cars don't even have quite that much horsepower. But battery technology is great. But Churchill Capital Group, if they actually confirm the merger, this is going to go crazy. Now, I don't have any numbers or anything to share with you besides Lucid Motors expects to be able to make about as many cars as NIO right now, which is 47,000 cars NIO produced last year. So they will be somewhere around that ballpark, 35 to 50,000. I don't think they have all the kinks figured out. They do have a little shop store thing they set up in Miami, I believe. Yep, little store to showcase their cars and make transaction points and deliver cars from. So that's good. That shows that there is going to be quite a bit of demand for their cars, which you could tell just by looking at them. They're beautiful. Anybody that has enough money that wants an EV, why wouldn't you get one of these over a Tesla? With manufacturing issues and all that, this is more of a quality. So it'll just tend to a different audience. But to be able to get in on even an opportunity to invest in this company as a SPAC at this stage is worth the risk to reward, in my opinion. Now, if you're buying these at these prices at $23, keep in mind, if this rumor gets rebutted and the merger is not going through, you are losing about 65% to 70% of your investment. So if that scares you, then don't touch CCIV. Just don't touch it. Don't even think about it. Feel free to get in after they merge or whatever, but don't do anything you're uncomfortable with and you do not like doing, and that is not up to your risk management. So with all that out the way, I am up 26.54% on CCIV. It is at $1,030. I'm up $216. My average cost is $18.50, and it represents a 4.17% of my portfolio. And that's one big thing I want to point out. If this really goes through, it will be more than 4% of my portfolio, but it's for my risk to reward tolerance. I could afford $800, and worst case scenario, I would be left with like $560, $570. And I could live with that. I could live with losing $300 if it came down to it, to risk gaining a lot more. If these shares hit $100, I got 44 shares. That's $4,400 off of 800. So you could see the risk to reward is different for me than it will be for you. So clearly, don't listen to anything in this video. Do your own research. Come up with your own conclusions. But with all that being said and all that rumbling on and mumbling on, hit me down below with a comment on what your favorite stocks are going forward through 2021 and after. Penny stocks, all stocks, I don't care. Just let me know, source that information. But with that being said, have a great night, guys, and I'll see you guys in the next video. Peace out.